Welcome, everyone, to another deep dive. Today we're going to cut through some of the usual noise.
Yeah, there's a lot of it out there.
There really is. We want to focus on an investment strategy that, well, it consistently outperforms pretty much everything else, but it often gets kind of overshadowed.
Lost in the shuffle.
Exactly. We're talking about investing in yourself. That's our big theme today. And honestly, I think by the end of this, you'll really see why it's the one bet that always pays dividends. We've pulled together some really interesting stuff for this one. It's a mix personal stories about, financial journeys, some practical how-to guides.
Yeah, and some historical insights too, right? Plus those self-improvement frameworks.
Right. And the goal really is just to pull out the sharpest insights, the concentrated knowledge that helps you get genuinely well-informed fast.
And our mission here is pretty clear. We want to distill those key nuggets that really show why focusing on you gives the ultimate return. We'll unpack practical ways to do it and explore some maybe unconventional paths to building real sustainable wealth.
Not just chasing quick gains.
Exactly. Not the fleeting stuff.
So if you've been glued to stock tickers or scrolling through crypto charts, maybe trying to time the housing market, just pause for a sec. What if the absolute best investment you could make isn't out there somewhere, not in some volatile asset, but actually within you? Your own capabilities.
The one asset that never crashes.
Precisely. Stick with us because the answer might just, reshape how you think about building wealth entirely.
It's funny, the most valuable lessons, especially with money stuff,
Yeah.
they rarely come neatly packaged, right? Like from a textbook.
Oh, definitely not.
They often pop up from unexpected places, sometimes even from, financial missteps. Those costly decisions we initially kick ourselves over.
It's true. It's often in those moments, those perceived failures, that the real learning actually starts.
Yeah.
And that really connects to a great personal story we found in the sources. Picture this. About 5 years back, someone, they really wanted to, quote, buy a better life for their family.
But they had zero investing experience. None. They stumbled onto this, super affordable options trading course. 2.5 days. Cost only $197.
Wow, that's cheap.
Right. Seemed like a fast track to wealth, so they jumped in. So their first strategy, selling put options to connect the premium. And, for a little while, it actually worked.
The beginner's luck phase.
Yeah, totally. They were making a bit each month, feeling like, and this is their words, an absolute genius. But then, the market does what the market does.
Uh-oh.
Yeah. A classic noob mistake, they called it. They ended up getting stuck with 4 stocks they didn't really want, assigned to prices that were way too high.
Ouch. So holding assets that had dropped in value.
Exactly. The value tanked.
Yeah.
And they were left holding the bag, understandably not wanting to actually sell and realize that big loss.
Man, that's a tough spot. I think a lot of people listening might have felt something similar, That sinking feeling when a plan goes south. But what makes this story powerful isn't just the mistake, right? It's how that mess up actually became the trigger for finding a much better way.
Precisely. It was a catalyst.
Yeah, turning failure into fuel.
Exactly right. Instead of just giving up, this person decided to, double down on learning. They figured out why it went wrong, not just that it went wrong, and they looked for a better approach. And that led them to pivot really masterfully to something called covered calls.
Okay, covered calls. Break that down for us.
Sure. So basically, it's a way to use stocks you already own to generate income. It's almost like renting out your shares.
Renting them out. Okay.
Yeah. So you own shares in a company, let's say 100 shares. You then sell a call option against those shares. By doing that, you're agreeing to sell your shares at a specific price. That's the strike price, if the stock hits that price by a certain date. And the cool thing is its flexibility. There are 2 main outcomes. Either your shares get called away, meaning they're sold at that strike price you set, hopefully at a profit you're okay with.
Right, because the stock went up.
Correct.
Yeah.
Or if the stock doesn't reach your strike price by the expiration date, it stays below it. Well, you just keep the premium you got for selling the option in the first place.
So you get paid either way, in a sense.
Pretty much. You keep the premium, keep your shares, and then you can just, rinse and repeat. Sell another call option for the next period.
Okay, that makes sense.
And the sources give a real example. This person owned 400 shares of Tiger, and they were selling covered calls with a $12 strike price.
And it's interesting how the sources even mention decoding the option codes, like that 250822C 12.0 thing.
Yeah, it looks like gibberish.
Totally.
But it's just the expiration date, August 22nd, 2025C for call option, and $12 is the strike. It just shows there's a logic, a precision to it. It's not just gambling.
Right. It underscores that financial skill isn't guesswork. It's about understanding the mechanics.
And here's the real picker, tying it back to our theme.
Yeah.
This wasn't just theory. The sources say this covered call strategy actually helped the person systematically sell off two of those stocks they got stuck with earlier.
Wow, so they used the new skill to fix the old problem.
Exactly. It's a perfect example of how learning, especially after a setback, gives you tools to actively fix past errors and build something more solid, turning knowledge into real action, real results.
That story really hits home the power of, individual learning and adapting. But let's be real, trying to learn complex stuff like options or really any new skill all by yourself, it can feel pretty daunting, lonely even.
Oh, absolutely. It can be a steep climb alone. And that's where our sources really highlight the value of support systems, external expertise, communities.
Like joining a club or group.
Exactly. They mention places like the Super Investor Club and Stock Market Genius. The key point is that these communities make the learning journey significantly less lonely. Instead of trying to piece everything together yourself from random YouTube videos or blogs, you're tapping into a collective brain. Shared experiences, asking questions, getting feedback.
Builds confidence, I imagine.
Definitely. And the sources got specific about a service like Stock Market Genius. They listed tangible benefits.
Okay, like what?
Things like real-time trade ideas, weekly Ask Me Anything, live streams with experienced traders, top stock picks each month.
So practical, actionable stuff.
Yeah, very hands-on, designed for all levels too. And crucially, that access to a supportive community, people you can bounce ideas off, discuss strategies with. It's more than just data. It's like applied wisdom.
When you break it down like that, it sounds like a pretty strong value proposition. The sources mentioned it costs less than $2 a day.
Yeah, that was the figure.
Which, as we just heard, you could potentially make back pretty quickly with a couple of decent options trades.
Right.
So you're essentially getting an online mentor, as they put it. Someone or some group doing the heavy lifting of research, finding opportunities.
And freeing you up, as the source amusingly noted, to spend more time with family or hobbies or, even playing with your dog.
Love that.
So it really brings up a direct question for everyone listening, doesn't it? What about you? Are you actively investing in yourself right now? Learning those new skills? Or are you maybe kind of waiting for the perfect time to start?
That perfect time that never quite seems to arrive.
Exactly. The sources imply you often have to create that perfect time yourself, intentionally.
That's a really good point. And it leads us nicely into maybe a broader view of investing in yourself, because it's clearly way more than just learning about stocks or options, right?
Oh, absolutely. It's much bigger than that.
Yeah.
It's about cultivating a whole approach to personal growth, building resilience, creating opportunities across your whole life.
Yeah.
And this is where the sources get quite profound. They state pretty emphatically that investing in yourself is the smartest move you can make, period.
Strong words.
Yeah. They say the return will always outpace the stock market. They call it the ultimate wealth building strategy. And here's the key line, because it's the one investment that never crashes.
That's powerful. It's not just about money in the bank.
Not at all. It's about building this unshakable foundation, capability, well-being, wisdom, stuff that serves you no matter what the economy is doing. The potential return is, limitless.
Okay, so let's unpack that. This big idea of self-investment. The sources lay out 6 kind of core pillars. Let's walk through them.
Look good.
First one, upskilling for career growth. This isn't just aiming for a raise, is it? It's about becoming more valuable, maybe even creating new ways to earn income.
Right, like learning to code or getting good at digital marketing or maybe public speaking, skills that are in demand.
And they mention platforms like Coursera, Udemy, Skillshare, places you can learn affordably.
And the key insight there was that even one focused hour a day, if you're consistent, can have a massive impact on your future earning potential. Opens doors you didn't even know were there. It's about that deliberate daily effort.
Okay, pillar 2, financial literacy. This is more than just budgeting. Right?
Way more. It's understanding how wealth actually works, how money can work for you, even if you start small.
Like reading those foundational books they mention. Rich Dad, Poor Dad, Psychology of Money.
Exactly. Those books change your mindset, not just give you tactics. And they also suggest looking into local finance blogs or community workshops, accessible ways to get smarter about money. Cultivate that abundance mindset.
Makes sense. Okay, third is mental resilience. Life throws curveballs, right? Financial stress, personal stuff.
Always. And what sets successful people apart is often how they handle those storms, their mental toughness.
So things like mindfulness, journaling, maybe using apps like Calm or Headspace. These aren't just nice to haves.
No, the sources frame them as crucial tools for building clarity, managing emotions, staying steady when things get tough. It's like fortifying your inner world before the storm hits.
Got it. Pillar 4, expanding your network. That old saying, your network is your net worth.
Yeah, and it's true. The people you connect with genuinely can open unexpected doors later on.
But it's not just about collecting contacts, is it?
No, not at all. The insight was about offering genuine value first, giving advice, support, helping others, building real relationships based on mutual respect, not just what can you do for me, help others, and it tends to come back around.
Love that. Okay, number 5 is fundamental. Health is wealth.
Absolutely non-negotiable. Your body is the engine for everything else. If you neglect it, everything suffers energy, focus, everything.
And the advice is practical. Start small, but be consistent. A daily walk, maybe meal prepping.
Or trying something new like Brazilian Jiu-Jitsu they mentioned. The point is, treat your physical health like a critical investment. The dividends, energy, focus, longevity are immense.
Couldn't agree more. And the last pillar, number 6, staying rich in knowledge.
This one's huge. Because unlike money, knowledge just keeps compounding. It builds intellectual capital that, survives any market crash.
So read widely. Biographies, business books, things outside your usual zone.
Yep. And also actively seek out new experiences.
Mm-hmm.
Things that stretch you, make you think differently.
Mhm.
Because knowledge doesn't just broaden your perspective. It literally expands your opportunities. And these aren't just abstract ideas. The sources connect them to real-world examples in the spotlight section.
Right, like learning about taxes for content creators.
Exactly. That's financial literacy applied directly to a modern career path. Or exploring work-from-home jobs like virtual assistant or transcription that's upskilling for today's job market.
And that house hacking example was fascinating.
Wasn't it? Buying a duplex or triplex, living in one unit, renting the others to cover the mortgage.
So you live for free and build equity. Genius.
It's a perfect blend of financial literacy and smart investing in action. Shows how these pillars work together to create tangible, life-changing results.
That's where it gets really exciting, seeing how you can actually use these ideas.
Mhm.
And speaking of using knowledge and maybe learning from mistakes, history gives us some pretty intense lessons too, successes and failures.
Oh, definitely. And the sources dive right into a big cautionary tale. Enron. Remember them?
Yeah.
Based on the book Enron, the smartest guys in the room.
Oh yeah, huge flame out.
Huge. It's described as a masterclass in corporate fraud, how this company, which seemed invincible, just imploded. They use incredibly complex accounting tricks, these off-balance sheet things, basically hid billions in debt while making profits look way bigger than they were.
A total house of cards.
Completely. Built on sand. And the reason this story still matters today, the big takeaway,
Yeah.
it's a stark reminder about needing financial transparency, needing strong corporate governance, and the danger of just blindly trusting leaders because they have fancy titles or seem super confident.
Don't just believe the hype.
Exactly. The warning is clear. If something sounds too good to be true, it probably is. Enron is like Exhibit A for the cost of deception. It teaches us to ask questions, dig deeper, value integrity.
That's a heavy lesson in recklessness and, frankly, greed. Now, let's switch gears completely. From that huge deception to something different. A historical detail showing the total opposite. Extreme financial discipline.
Is a really striking contrast. We look at the wealth whiz fact about John D. Rockefeller's quirky ledger.
Rockefeller, richest guy in modern history, arguably.
Right. Unimaginable wealth. Yet he had this habit, some might say obsessive, of writing down every single expense in a personal ledger.
Everything, like even tiny stuff.
Yep, even a 5-cent tip. It wasn't about tracking millions. It was about accounting for every single penny. Absolute accountability.
Wow. The contrast is incredible, isn't it? Enron leaders hiding billions and Rockefeller with his billions tracking nickels.
It really makes you think about what actually underpins lasting wealth.
Yeah.
And that contrast highlights something crucial, often missed when people chase quick money. Building real, enduring wealth isn't just about making money. It's fundamentally about respecting every dollar you earn and knowing exactly where it goes.
Discipline and awareness.
Totally. Rockefeller's ledger teaches us that meticulous tracking is foundational. Whether you're starting with hardly anything or managing a fortune, every cent counts. Respecting it builds long-term financial health.
So, wrapping up this deep dive, the main message really comes into focus, doesn't it? True wealth, the kind that lasts, it's not just a number.
Not at all.
It's built on, well, curiosity, resilience when things go wrong, learning from everything, especially the mistakes.
Those are often the best teachers.
Right. And most importantly, that continuous intentional effort to learn and grow, investing in yourself across your whole life.
Absolutely. And just to recap those 6 core areas we talked about: upskilling your career, boosting financial literacy, building mental resilience, expanding your network smartly, prioritizing health as wealth, and always staying rich in knowledge.
They all work together.
Exactly. They feed into each other, creating this holistic kind of wealth that goes way beyond just money.
So for you listening, here's maybe a simple plan to get started, drawing from the sources. First, set aside a specific budget for personal development. Doesn't have to be huge, just intentional. Make it real.
Good first step.
Second, pick just one area to focus on for, say, the next 3 months. Maybe it's a skill, maybe financial literacy, maybe a health goal. Just one thing.
Focus is key.
And third, the hardest part maybe, stay consistent. Check in with yourself weekly. Track progress. Notice the small wins. Adjust if you need to. It's a marathon, not a sprint.
Well said. And remember, the absolute greatest gift you can give yourself, the best investment, is growth. By pouring into you, you're building that mental, emotional, intellectual capital alongside the financial, and the returns, they really are limitless. They touch every part of your life.
So here's a final thought for you to chew on as you go about your day. What's one unexpected, maybe wild card lesson you've learned on your own journey so far? And more importantly, how are you going to intentionally invest in you starting today? Keep learning, keep growing, keep diving deep. We'll catch you on the next one.